Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, 18th of January. Today, apart from the building permits that still showing pretty damn high preliminary data, 1.9%, the big data today was initial jobless claims and continued jobless claims. The surprise was that they came way lower than before and than expected. So 187,000 versus the 200,000, and the continuing jobless claims also way lower than expected and from the previous one. Remember that all these we want this to be higher. So this is a miss and this is a miss. And apart from that, right now at 11:30, Bostic was saying something that I think took by surprise the baseline, the markets. Remember that I've been mentioning during all my videos that the aggressive path moving forward in terms of interest rates from the analysts are too aggressive, and the Fed is always day after day saying that. And Bostic today highlighted again this. My baseline is for rate reductions starting in Q3, with care needed not to cut too soon and risk renewed demand and price pressure. I am open to starting rate cuts before July if there is convincing evidence that inflation is slowing faster than anticipated. But right now, we are not seeing that data. So Q3, starting interest rate cuts, it's against the aggressive rate path moving forward that is pricing the markets. So that's certainly bad news. And that's why we've been, since the open, we've been pretty damn bearish. So let me tell you, it was a big day, and I think it was a big day for me even before the open, because at 6:30, at around this zone right here, Apple, Bank of America changed the forecast for Apple from neutral to buy, and that's continues skyrocketing the market into the open. Since the open, we've been moving higher, but not that much. Let me just take a quick measurement of that. So price range since the open was here. Right now, since the open is just 0.07. But the gap that we got since pre-market was really big. Remember yesterday, review my video, I was saying, please do not short down here, because this was the liquidity that was pending to be taken. And into the power hour, I said, be careful. I think we are moving forward into the close. And that's what we did. So after seeing that, I was just looking this fair value gap on the 30-minute chart that we held throughout all the pre-market and then starting moving higher. So where did I take my trade? I took two trades. Actually, it was one trade with two contracts. So this is the fair value gap that we held here, multiple instances of this. And in this big move, in this displacement higher, I was saying, okay, let's see what happens. So we started moving higher, leaving gaps behind. We got this one, this one that we pushed here, and I was watching that 5-minute fair value gap into the 15-minute fair value gap. So confluence in here, and it was just a really clear trade setup for me. So basically, I took this with the stop right below the fair value gap. So taking here with the stop down here, it's basically 13 points of risk for 33, the first target. This liquidity up here, this was the first target, and the second target was this one, the same as yesterday, but we didn't continue higher. So today in pre-market, those were really big, high, clear zones of liquidity. We took the first one for 33. I scale out one of my contracts, 33 points of profit, and the other one, that's why I have the other one here. On the second one, we retrace it, we bounce it from here. I didn't add we were leaving these fair value gaps, fair value gap after fair value gap. We were super bullish into pre-market. So that's why I was confident, okay, my stop is here, just basically a break even after the first profit target. And the second one, we took this inner liquidity, and then the final liquidity was basically here. So 53 points plus the other one was 33 points. That's 600 plus 1,000, 1,600. Yesterday was 1,500, today 1,600. I mean, it's super easy to just find these setups with risk management. That's the key. Being patient and having risk management. I don't care if the market's going to continue higher. I don't care if this was a potential of 100 points. I just don't care. I don't care what the market is doing right now. I just took my money and closed it for the day. That's what you have to do. Be consistent. The dollar is changing from red to green. It's just consolidating up here. This is not good for the equities market. UK was also pretty choppy. Banks are still in the red. Tesla is deep in the red, but Apple is pushing really higher. It's the only thing holding right now, 2.78 the Nasdaq. Google, Nvidia, and Meta are also pretty decent, but look at this chopping of Nvidia. It's just everything happened in pre-market. So with that being said, I took my money in pre-market and I don't care. Now, in terms of forecast, this is the 30-minute chart. We took this liquidity. That was my final liquidity, at least for this week, last week high. And we have some other liquidity that was in pre-market in this day, on the 28th of December, the last trading day of 2023 that we got, and then we basically pulled back a lot from there. So we have liquidity from there, and on the daily chart, let's just hide this for a moment. This week is quite, on the daily, is quite surprising after this balance and equilibrium, and now we are pushing higher. I mean, what's the first target that I think, maybe not tomorrow, but for next week, this is my target for next week, 17,165. And if we take that, we have some other liquidity up here at 17,200 and then 500 from the continuous chart. This is the back adjusted continuous chart. Look at this. So there's a lot of liquidity up here towards the all-time highs. So if this week we end up closing pretty bullish, for which I think we are right now, despite the fact that into the open we just pulled back and sellers took pressure, took the action due to jobless claims. Look at this move in pre-market. There's a lot of people going bullish, and I think big money, smart money is also being bullish. So I think the draw on liquidity will be continuing higher at least next week. I don't know if tomorrow we'll be pulling back or we just consolidate, and now it's Friday, anything can happen. But for next week, I have my targets really cleared. So patience, you have to be patient. Today is just a range bound day after the open. It looks super bullish due to the pre-market action, but right now it's just, since the open is flat, but we are still green. So be careful, don't risk it for the biscuit, and just be patient. Right now there's nothing. If you didn't take these pre-market trades into the open, be careful, because this choppy price action is just, manage your risk as always. And remember that tomorrow is Friday. So we have a lot of information. I think next week is going to be pretty bullish. So there will be opportunities. Be patient, be disciplined, and manage your risk until then. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember that I do these videos every single day for market forecasts, market updates, and market recaps. I appreciate the time. As always, remember that the trading day is not over yet. Don't ruin your week right now. Today is pretty damn good day. If you took profits, congratulations. And tomorrow is Friday. Be careful, and remember, as always, discipline, risk management are key for your success. Stay safe, everyone, and see you tomorrow.